All right, so my next guest says, investors, you have to look past the current issues that are roiling this market and look at the opportunities. And really, that is the essence of investing. Joining me now, Waddell and Associate CEO and CIO, David Waddell. And David, listen, so then how worried are you with respect to the inflation crisis, the looming recession crisis? That's one heck of a back-to-back hurdle to get over.
So these are all good things to worry about, and everybody's super worried about them, right? So if you poll average investors, 18% of them are bullish. If you look at professional investors, the amount of cash on the sidelines is at record levels,
right,
and there's records amount of cash. So there's a lot of rally fuel around, and every once in a while we see it, right? We saw that 17.5% rally off the June 16th low. Just recently, we had another almost double-digit rally. In fact, we're still 2% higher than we were this time last week, right? And we're still 9% higher. Let me look. Yeah, 9% higher.
From the June lows.
Yeah,
right,
exactly. So we're in a process, I think, of starting to come out of this period of despair, but the Fed wants us to be miserable, right? The prescription, like Clubber Lang from Rocky III, was pain, right? We typically have the Fed on our side. They're on the other side, but this is all baked into expectations. This is just, some sentiment blowing off, I think.
Near term, though, I guess the challenges would be, listen, 3,900 on the technical side held, maybe then below there. Then you start talking about that June low again, 36.66. But I'm in the same camp as you with respect to, I am licking my chops as an investor. I know stocks that I wish I bought, like as I was doing research last night or 2 days ago or over the weekend, like, damn, I missed that one. It's like going back in a time machine. Although it's still easier said than done, particularly for folks who haven't been through a whole lot of these things, and also the notion of timing. Now, I look at the stocks that you like, or some of the things that you think look interesting here, and they all have one thing in common: low valuation metrics, particularly low PE ratios.
Correct. So since it's football season, we were just talking about that, I want a power football team right now, right? I want big, big.
You're like square. 3 yards in a cloud of dust.
That's
old
exactly
school.
what I read.
Old school.
So I don't want to be throwing wildcat passes to profitless tech and stuff. So you could get a bunch of low PE stocks with high dividend yields that can just grind down the field. And then if you want to take risk, if you want to run 3 receivers wide or something, do it with the international stocks, do it with emerging market stocks, which are high risk but low PE, instead of high risk and high PE like all the tech stocks that everybody really wants to chase.
Although, like when the coast is clear, and what I mean by the coast being clear is not that the Fed is going to pivot and make an announcement, but when Wall Street senses that the coast is clear, some of those high flyers are going to make big chunky moves. I mean, would you want to try to be positioned for that at all?
I think about it, right? I mean, I'm the steward of the client's portfolio capital, but I don't think you need to do that right now. I mean, I think you can gin out, like you said, 3 yards in a cloud of dust, and if we want to go way down the field, we can do that a little bit later, right? Because the differentials are still wide. So if you look at the growth side of the S&P,
right,
we're trading at 21 times earnings. You look at the valuation side, we're at 14. So tech earnings are starting to roll over. The expectations are coming down. You'll get another chance at this. So if you want to throw kind of a Hail Mary, then find a broken SPAC stock, but I don't think you need to gin out positive returns.
I'm thinking NVIDIA. You're talking about a broken SPAC stock. I wouldn't put them in the same category.
That may work if they could get materials.
So before I let you go, okay, I looked today. It's a few names that are up.
Yep.
And the fertilizer stocks are hanging in there. The lithium stocks are hanging in there. Solar stocks are hanging in there. What about the notion that there's going to be new leadership, right? Because every 10 years or so, you get new leadership. It was energy for a decade or so. Then it was technology. Could there be a new emerging leadership that maybe this is the time to try to find those?
So, if you look at the action over the last couple of weeks, what's been surprising is the upside-downside capture on financials has been pretty good, right? So the financials are sort of asserting themselves right now. And energy, you can really make a case for energy based upon not only the fundamentals, but also the fact that you've got an entry point here with oil prices down 30%. So I do think there's an opportunity for some new leadership. So you don't want to abandon technology, but I'm saying rotate into quality, Intel, Cisco, some of those names, and then you'll have the opportunity to chase MicroStrategy a little bit later.
All right. Dave, thank you very much. All right, folks, the White House about to